Are you single and wondering how to become head of your own household? Well, today I have 6 tips to help singles with their home buying and mortgage guide, so stay tuned. Hi, I'm Melinda Capp with Melinda Capp Homes. Welcome to my channel. I'm glad you're here. If it's your first time, I make real estate videos each and every week and then sometimes throw in some fun in between, so you don't want to miss a thing. As homeowners ourselves, we understand that your best life begins with your home that inspires you. You may think as a single person, homeownership may not be achievable, but let's chat about that. As quoted by Laura Ingalls Wilder, you better young folks know who that is. She says, home is the nicest word there is. Aww. Isn't that sweet? Do you picture homeownership as an event that happens only after 2 people get married and start a financial partnership? Some mortgages are still structured to reflect that idea, but these days, more and more single people without children are investing in their own homes. In fact, single homeowners in the US is the highest it's been in more than 100 years. If you think about it, you may believe that the rising home costs, the reduced buying power that comes with a single income, and the way mortgages are structured, becoming a homeowner as a single person might not seem so easy, but it's entirely doable. So I've put together 6 tips from real estate and financial professionals on how a single person can buy a home within their budget. So let's get to it. Tip number 1, consider government insured loans. I'm sure you all know what this is. That means FHA. Even if your income is substantial, having one income to pay the bills inherently increases the risk for a lender. The risk in a lender's eyes is a single person does not have a partner's income for a mortgage, so if something major were to happen, such as medical emergency or significant reduction in income, let's face it, in these uncertain times we are living in now, it could be difficult to pay your mortgage on time, and everything else that you have on a single income. And don't forget about that initial down payment. But government insured loans are a good option to have, and a lower down payment is required. So let's take an example. As mentioned before, the FHA loans. While a conventional mortgage can require up to 20% down, an FHA loan only requires 3.5% down. In addition to that, veterans have VA loans, which are backed by the Department of Veterans Affairs. These can help vets get lower interest rates with no down payment. Did you hear that? No down payment at all. And they don't even have monthly mortgage insurance premiums. So thank you to all those vets that are serving our country and have served. We appreciate you. Tip number 2, don't think too big. Consider how much space you're going to need as a single homeowner without a partner or kids. If you look for smaller houses with 1 or maybe 2 bedrooms and 1 bath, you'll end up with a much lower mortgage. Also, having a more manageable space will also reduce all those costs and bills. So you may need to focus on your credit before you try to get a mortgage. If you have a lot of debt, it can be virtually impossible to secure a loan. For most loans, you'll need a credit score of above 600, but a credit score of 700 or higher will definitely help you secure those lower interest rates. So let's give it some perspective. On an average, 90% of mortgages in 2019 had a higher credit score of more than 647, and 75% of the mortgages had a score of over 700. So what can you achieve? Working on paying off all of those significant outstanding debts and pay your credit cards on time. This is definitely going to help with your credit score. Fun fact, payment history makes up about 1/3 of your credit score. Remember, higher scores also mean you'll be able to make a lower down payment, which may be necessary if you are able to snag your dream home. And tip number 4, beware of big mortgages. I have this conversation with my clients all the time. Just because a lender will and can approve you for a larger mortgage does not mean you should dive in and accept it. Remember, you alone will be carrying that mortgage payment. So be extra cautious about the size of your monthly mortgage payments. Also, be aware of opting in for those adjustable rate mortgages, what we call ARMs. These types of loans begin at a fixed interest rate, which is super low, But an adjustable rate mortgage will change after either 3, 5, 7, or 10 years, and your rate's going to adjust based on the market index. Sometimes that means your initial low interest rate will shoot up and raise your monthly payment. If you start with a fixed rate mortgage, and face it, right now they're super low, you'll be able to plan ahead and budget your spending. Which leads us to tip number 5. Consider a co-signer. If bad credit or other issues are interfering with your home ownership dreams, consider adding a co-purchaser to your mortgage, whether or not they intend to live with you. Keep in mind though, you may have a family member that can lend you cash to make your down payment, but be sure to speak with your agent and your lender so it's structured correctly into your loan. And now for the finale, tip number 6. Make a comfortable down payment. But if you can put down a substantial down payment, your monthly bills will be lower, and you'll have a good chunk of equity in your home right from the get-go. I am sure you have heard the saying, you don't want to be house poor and struggle from month to month to keep your steep payments. So don't make your down payment so large that you're left with no money in the bank in case of emergencies. So be sure to download my free buyer's guide below and check out this next video right here to help you with your journey.